Hello guys and welcome back to the channel. So today's video is going to be a very controversial one. We're going to speak about how to prepare your portfolio for a black swan event, and the reason why this is going to be a controversial video is because I'm not a financial advisor. I'm not trained in this. However, I have a market experience and I can observe things when I look at them, and it has become very controversial to observe and state some facts. And there is a lot of things that are being recommended that I think are the exact bad strategies for this event, and I'm going to tell you how I'm going to prepare for bad outcomes in the Russian-Ukraine war and how you can do the same. And remember, this is not financial advice. I might be high, I might be drunk, I'm just a guy from YouTube. So make sure you do your own research and you make your own opinions. And if you like this content, then subscribe. Number one controversial opinion is that we have all been told the big Bitcoin lie. So everybody has heard and has been force-fed that Bitcoin is the new digital gold, it's the anti-inflation hedge asset. And the sad truth is that yes, these all sound good and they have very logical reasons why this should be the case, but when you observe and you see what's going on in the market, then you see that Bitcoin's decision pretty much to any uncertainty or any market downturn is let's fall 50%. So it's pretty much one of the worst assets that you can be in when the shit hits the fan. So I just want to show this to you. I actually did another video where I compare gold, the S&P 500 and Bitcoin in different market turndowns. And I just quickly want to show you that since the inflation fears have started, which is in November, that's when Bitcoin was up here at 67,500. You now you're not down as much, but you would have been down as much as 45%. Currently you would be down 40%, which is way worse than the market. It's even worse than the asset that you need to be your cash asset that loses 7% with inflation. And yeah, this is not good. And if you look back, I have marked historical, like this is the COVID crisis. And in the COVID crisis, again, as I said, Bitcoin's answer to uncertainty is let's drop 50%. So here you see what happened in COVID. This is what you see in the December 2018 market crash. Again, 48% crash. And there has been only one time that I have found in 2016 when the market was turning down. And even one time, this is the only time when you would have been 8% up on Bitcoin. And here you were 5% down. So here that was not major. And then you see the chart ends here. So there's no comparison going back, and Bitcoin was very much not mainstream. My opinion on Bitcoin is it looks like it's very correlated to the market. Basically what happens is when you have a risk-off market right now, then people don't want to have risky assets, and Bitcoin is considered a risky asset, so they sell it. And I have actually seen in Bitcoin chart that it signals the market bottom, so it basically starts going up before the actual market starts going up. Again, this is very interesting. You can go back and play with the charts a little bit to see if you see this yourself. But total lie. If you're afraid of the 7% inflation, you had from the US dollar, you had a 50% inflation in what is it, 2 months, or 40% in 2 months? What is that on a yearly basis? Hundreds of percent. So not good for that. So another one, that Bitcoin is a digital gold and a safe haven asset. Again, I don't see this proven in the charts. And even with the Russian-Ukraine war, the war, I believe, started on this day. It is up slightly, but nothing like the gold. I mean, if you look at gold, it has pretty much skyrocketed since gold. So gold is very much not disrupted yet. And again, these views might be controversial, but hey, I have to tell you what I see. I'm a transparent guy. I'm not going to lie to you. And I mean, don't believe me. Take your lying eyes. So now the next answer that I hear a lot from financial analysts is that you need to diversify, and this is also a very, very bad advice in my opinion, because I have a portfolio that is about $100,000, and I can just tell you that when the market is down, you're going to be down if you're diversified. Your only chance of being up is if you luckily can choose the one asset that doesn't go down, and you happen to be in that, and you're not overly diversified. And yeah, so in the diversification, it can dampen your loss, because then your portfolio would be acting very similar to the S&P 500. And if you look at the S&P 500, or the Nasdaq, depends on how you diversify, everything is down since November. It's down. I think the Russell is down more than 20%. The S&P 500 is not at 20%. We see what happens now, but close to 20%, which is also, were you protected from a Bitcoin-like loss? Yes, but did you lose money? Definitely. So I wouldn't consider this a valid protection mechanism for your portfolio. But if all these things that we hear are bad, what are some good answers? Again, surprisingly, things that have worked for thousands of years, we can think that they might again still be working, and gold is one of them. I actually looked at, so basically this is since November, since the S&P 500 market crash has started, you would be 9.5% up, which is better, slightly better than inflation. And I mean, for example, my portfolio, having owned stocks, is down about, I don't know, 15-20% since November. Luckily it was down from pluses that it has made, but still is down 20%. And it's like, compared to being down 20% to being up 9.5%, that's a 29% difference. And I looked back again at gold. Now, even on the COVID, this is when COVID hit. So gold was down 10%, but when you look at I believe Bitcoin was down 50%. The S&P 500 was down 35%. So by far, this was the best thing to be in. Then I looked at different market downturns, and it looks very what do you call it, like not correlated with the market. So usually when the market goes up, gold does not good, and when the market's going to steep falling, then gold does really well. The hard thing with this, and the downside of the strategy, what I see, is that it's very hard to know when the market turns. So if you're very, very afraid, gold, I believe, is a very good asset if you can secure it via a gold ETF, or I don't know if you can buy gold direct. I would go with the gold ETF. Is that you do get protected if you sell everything and you go into gold. You will not suffer losses, but as you will see in point number 2, you might miss out on a crazy upside when the market turns, because gold is not it's safe. It's not really moving both up and down. Here you can see a 2016 market crash that happened, and these points that are marked, you can see it in this other video, is when the S&P 500 was crashing like crazy, and you can see it's completely disrelated, like it's completely the opposite of the S&P 500. When the S&P 500 is crashing, gold went up 12%. But then, after this point, the S&P 500 had a great time and gold was flat all this time. So now, here is the next strategy. So what you can also do when a black swan happens is you accept it and you see it as a humongous buying opportunity for the next 5 to 10 years. Here's the S&P 500 on a multi-year time horizon, and you can see every time the world was looking very dark and investments were looking horrible, it was just a great buying opportunity. Look at 2018, look at COVID 2020. I mean, imagine if you would have been buying very fundamentally fantastic stocks. I mean, you would have made out like a bandit. And now, potentially, if the market falls more, we're just heading into such period. And if you have a 5-10 year time horizon, and you have the stomach to be down a little bit on your stocks, then this can be a fantastic opportunity. And the stocks that I'm looking at, for example, are companies with great growth potential, great balance sheets. I'm actually a very big Palantir investor. 40% of my portfolio went into Palantir. This is a company that I'm obviously very biased on, and I really dare you to do your own research. And I bought it here on this red candle, and it's down since then, and that's completely fine. And as the market goes down and you continue to buy really quality companies, in 5 to 10 years you're going to make out like a bandit. If your time horizon is shorter, I don't recommend it. If you don't have the stomach, then I don't recommend it. Then maybe your best option is to just have your portfolio in cash, because actually you would have done very well. Probably better than 90% of Wall Street if you would have just sold your portfolio when the Fed uncertainty started, and when this war started. So it's really just something to keep in mind. So I really hope that you guys like this video. Please comment below what stocks you're looking at, and if you agree with the opinions or you find them offensive in this on this channel. And make sure you subscribe to the video if you liked it, and I'll see you in the next video.